Steve, back in early February, you were looking for natural gas to bottom out. Is the bottom you were anticipating in place?
Looks like it is, Dana. Final leg down took some time to form, but there are five distinct waves from the mid-November peak. I think it's a good example of an impulse wave, and it can be counted as complete at the mid-February low. If so, a proportional corrective advance has begun, and we're seeing the initial evidence with the recent pop above the Elliott channel.
Excellent. And your commentary in the March Global Market Perspective talks about the seasonal trends in natural gas. Can you elaborate?
Sure, throughout its history on the NYMEX, natural gas has had a tendency to post significant bottoms in the first and third quarters. While it doesn't always work out and the size of the ensuing advance can vary widely, the bottoms hit like clockwork in 2016, 2017, and again in 2018. And I must say that the setup for a repeat in the first quarter of this year is a strong one based on the Elliott wave structure. If the market has indeed completed a five-wave decline at the February low, we know from Elliott that a corrective advance should follow. Now, given the size of the preceding decline, which was nearly $2.40 over a 3-month span, the rally is likely to be substantial in terms of both magnitude and duration.
Let's switch to crude. In the January issue of GMP, you were anticipating a proportional counter-trend advance in the first quarter. Prices have advanced as you suggested, so what's next?
From the 42.36 late December low, the market has advanced in three distinct waves. Elliott terminology, it looks like a zigzag corrective pattern. Now, it's a close call given the market's precarious position at this juncture, but really there's nothing yet to suggest that the rally is complete.
What would it take?
Well, Dana, as with any correction at virtually any degree of trend, when you have a well-defined corrective trend channel like we do with crude, the first hint that the correction has run its course comes with a decisive break from the channel. Now, I realize that the term decisive is vague, but you have to allow some leeway for traders to run stops. They all know where the trend lines come into play. The next clue that a reversal is underway is for the market to trace out a five-wave structure. As you can see, crude is flirting with the bottom of its corrective trend channel as we speak, hence the reference to a precarious position. If the selling pressure persists, I'll be looking for a five-wave decline to support the idea that the larger downtrend is back on track. Until then, I've got to respect any remaining upside potential. You can see a similar setup from the 2016 low through the 2018 high in the weekly chart. The market rallied in three distinct waves, a zigzag, and once the corrective trend channel broke, the market never looked back. Now, there's no guarantee that we'll get an instant replay this go round, but it's well within the realm of reason.
Thank you, Steve. Let's talk again soon.
It's always a pleasure, Dana.